Okay, so it's Saturday and I'm trying a new microphone today. It's the WM189, a little cheapy on Amazon, but had very high reviews. So tell me in the comments what you think. So yesterday we made a video. We talked about two subjects, and one of them being Takaichi. Was she going to be elected head of the LDP? And she was. Now Takaichi is a ultra conservative, anti-immigration, pro-military, um, believes that if a media outlet says something negative about the government, that they should be closed down. They don't want any immigration. She does not like China, and she is very supportive of Taiwan. But it's her policies on economics that interest us. And I would say right now, Japan's at an inflection point, and Takaichi could actually be an accelerant, like we have said that Trump is. Okay, and it's not because they're conservative and everything. It's because that they have beliefs on which way the economics should go. And actually, it's kind of similar in a way. She believes in driving down the interest rates and having a expansive fiscal policy. Now I know Trump says he's here to cut the deficit, but the two times that they were given a chance, he passed the two largest tax cuts in history for the oligarchs. So they're actually pretty similar, right? Now we know about Japan. So remember the yen went up and the yen trade almost broke because they brought in Udida, and Udida said, I'm going to raise the interest rates. And they went from negative to 50 basis points on the short. The 10-year bond moves up to a 166, all right? And the 30, like all the other sovereign debt in the world, the long end is moving up strongly. It's now at 3 point, I think it's 1.6 today, but whatever, it's right there. And you can see here that the yen has kind of like stabilized here around, let's say, 145 to 147. So two things happened. Ishiba, who was the prime minister, who resigned in less than a year, said he would not have a fiscal package, stimulus package, because it's 100% borrowed, and he says he doesn't think that's a smart thing to do at this time. And then they had Yurida, who said, you know what? Even though I'm here to normalize the interest rate structure in Japan, we're not going to raise rates now to a minimum of the first quarter of 2026. And this was pretty big news because the inflation rate is 3.7%. So when you think of real interest rates, which is the interest rates minus inflation, the long end, the middle, and the short end, they're all negative interest rates, all right? And so you would wonder, how could the currency go up when they have negative interest rates, all right? So here's Takaichi, and she's said to be the first female. I just happened to watch a female from Japan, and she was not happy over her being elected. She said she is so conservative, all old school. She says, think about it. What would drive old men to vote for her? And she said, because she agrees with them. So you can read here, but it's really the last paragraph that we're interested in. That Taki is a political veteran, multiple things, but she's a big supporter of the late Shinzo Abe's Abenomic policies, which is low interest rates and fiscal stimulus. All right. Now the last paragraph here, you can read. I would read all this, but the last paragraph is what we want to see. Morgan, before the election, said that if anybody else won, you could see the 30-year drop to 3%. If she wins, it's going to rise to 335. So we're at 315 right now. Okay. So why is Japan at an inflection point? Well, as you know, we almost broke the yen carry trade last year, and we hung on, through that day by our fingernails, but we hung on, all right? And we supported we drove down the yen with the Japanese, and they said they're not going to raise the interest rate. We're not going to have a fiscal package. All these things calmed everything down. Now Takaichi's coming in, and her thing is she is full blown supportive of a fiscal package and lowering the interest rates. And I know they're low, but she wants them even lower. Okay. So now we have to ask ourselves a question. Okay. How can we do this? So when Abenomics came around, started in 2012 all the way to 2021, basically they went from about 150% debt level to 260. And I've always said, how did the world participate and allow the Japanese to go from 150 to 260? And it was because of the yen carry trade. It's the biggest trade in the world. It's probably somewhere between $3 and $5 trillion. Okay. And so what this trade does is it says to the world, and I think there was a deal that Abe figured out. So when it's no mistake on how Takaichi talks, fiscal policy, fiscal stimulus, and lower interest rates. So what they did was they went out and they bought the JGBs, and they stimulated with the fiscal policy. They bought JGBs and they suppressed the interest rates under Abe. Okay, and we I think they figured out that there's actually a partner in this, and it's the investment world. The investment world said, hey, as long as you maintain those low interest rates and stabilize that, okay, and we can buy your JGBs, borrow against them at very, very low interest rates. Actually, they were negatives. They're probably paying like 10, 15 basis points. Now they're paying, well, the rate's 50, so they might be paying 60, 70, okay? And they cut a deal. The investment world and the Japanese government, and the investment world poured in the money, up went the deficit, and the BOJ, I think they own somewhere around 35, 45% of all JGB bonds. And the other thing is they own 55% of all the ETFs of the Japanese market, not the stocks, the ETFs. They own 55%. Now, they just said that they're going to start selling like 6 billion yen a month, I think it was, 6 point something billion yen a month of the ETFs, not of the JGBs, obviously. Okay. So, what's the inflection point? Well, so I saw someone on my feed on X, and they said, hey, this is going to be great for the yen carry trade. Now they're going to pour into the yen carry trade, and then they're going to borrow against the JGBs, and they're going to buy the US stock market in bonds. Okay. And given the history starting in 2012, that would be the answer. Okay. But I don't know if that's really going to be what happens. One, when we started in 2012, we didn't have a sovereign long-term bond crisis, which we're in right now across the entire world. Okay, this is huge. So is the investment world, one, will they willingly participate in buying more Japanese debt so that the Japanese government can suppress the interest rates and continue their fiscal policy, and then the yen carry trade gets even bigger? Or when the policy is introduced that we're going to spend X amount, hundreds of billions or trillions of yen in a fiscal stimulus package, which then means, think about it, for every yen you raise, I'd say a third of it is going to have to be spent on buying the bonds to keep the interest rates low, if the investment world allows this. Remember something, every trade in the world can work until the world says, we're not participating anymore, okay? And so this is what Japan is faced with. Now, they just elected her. She's going to be in power like tomorrow or Monday, all right? And when she comes in power, what are they going to do? Now, if they pass a fiscal policy to jumpstart the economy or give money, because over there they say their inflation rate is 3.7%, but it's sans food, which is going up like 16%. They have a terrible problem with rice. She wants to give them cash, everybody in Japan cash. Will the market take this, or will the market say no and drive up the 30-year bond? Because think about the yen carry trade. The yen can go up and break the trade. The yen can crash down, cause inflation, drop the JGBs, which breaks the yen trade. What do you think is going to happen? Tell me in the comments, like and follow, and thanks for listening.